Trying to think. Alright.
What the hell is this?
Baby, please. Dang, I wasn't even looking at my screen.
Oh, you ass wipes, man. I hate. Oh, they're gonna. There it goes. I was trying to catch that move. Oh my gosh. I entered. Oh, wow.
I know this.
Guys are watching Mr. Black.
Who?
You,
How you know?
because I know.
Yeah, man. I'm pretty much done trading, so just watching my guy.
Watching Google puts.
Yeah, puts are good here. If you don't want to hop in. Before this
Yeah,
call.
puts are good here. Pretty late now.
I'm in. I'm in Google puts.
I mean, yeah, we're below everything.
You're in Google puts.
Yeah.
What the hell? I don't got Google on my watch list.
This guy.
Baby, you're the baddest one. I'm hoping
Oh, it's dumping.
Are you light in that contract? Are you?
I'm at 4 contracts. Total 708. Let's put a 10 seconds. Okay. I can't really use any of these as levels, but if they switch upside, say this is interesting.
Deep puts before they talk and then sell.
Wow, the contract moved 6 cents on Google. That's it.
Oh hell no.
That is so weird. Get me out of there.
That's just such a common pattern. They're gonna drive price up and then right before he talks, poop it down. We're about to touch support here, but touching calls right here would be dumb.
There are so many that we can target. Yeah, so if we do it from like here, first resistance, second resistance. Yeah, let's say our first resistance. It's way upside. Downside. Say this is a resistance. Dang, SPX puts would have been nice.
Strong support here could probably scalp it to the upside real quick and then get out. Stay in there.
Hmm. falls back to the order block. Buying volume is there.
Yeah, so he calls strong support here. How would I do that?
Let me see. I think SPX calls here are good.
Yeah, I think too, but the volume's too small for me.
I'm just gonna get in early at 470 for 5695. 470 for 5695.
Yo, I can't hear paid, bro. Can you hear?
Can you hear me? Hello?
Yeah, he said hop in the call.
Oh,
Y'all can't hear me?
I
yeah, I hear
can't.
you better, bro. Your voice is so low, bro.
Oh, I was like, what the heck?
You must be tired, man.
No, I'm just looking. I'm not even doing nothing. What did I just say I got in? 605.
You so totally robbed.
Call at 476. I
Let's see
need to
on
get
our
filled
hard.
at 470, bro. I got filled at 465. But I'm still down.
I am.
Target. Let's say the top of this value gap first.
What y'all see in the XBX goals?
I'm just lottery doing. I'm just lottery.
Uh,
We inverse this fair value gap. I'm gonna try to have it retrace. And there's a lot of volume everywhere else.
Oh, sheesh. When they took the shit. That's crazy. Crazy.
You just see.
So, 1, 2, 3, 4, 5, 6. Bruh. 67.
Yo, I'm so tired. Let's see. Oh, hold up.
80%. That's crazy.
I think I dead hurt my neck or something. Staring at this screen yesterday. We could play puts here. I don't even know if I want to trade anything else other than what I called out.
Yeah, bro. I thought it was making a low,
It's
you know,
just
high low or high.
FOMC. It's gonna be crazy.
Our break of this to open price look good.
And you can play puts to yeah. Let's see. Yo, why does my neck actually hurt though? I need to like foam roll my back or something.
Dang.
What you saying, dang
Guys be going crazy.
to?
You're not holding those calls, are you?
Huh?
I might be.
They're-
I'm waiting. If this box, if it breaks, or if it inverses this fair value gap, then I'll get out. They're only down 6%. Yo, I'm mad hungry. I never pulled up to In-N-Out yesterday.
What
See,
happened?
I never went to In-N-Out.
middle of the
yesterday,
move.
bro.
What is that? The imbalance. So 50% mark.
Hold on, let's see if this candle close below.
Yeah, we're gonna see
Push
what
might
goes
be
in.
good. I'm gonna hop in again.
You're gonna hop in again?
Hmm
I'm watching
I
puts
already
right
had
now.
a 5 to 1 RR already.
I'm gonna
It's like
get.
5 minutes ago.
I'm gonna hold these till like end of day. These
Hold on.
puts. I'm gonna get right on the money
Yeah,
maybe.
I'm in puts again.
500-600. I'm in.
I'm in puts again.
50,
I'll be holding
600.
it to open price at least.
Yeah.
Oh my god. Keep it up. Keep it up. Come on, give me a 3 to 1 at least. I need a 3 to 1 minimum. Let's go, baby. It's at open price. Whew.
That's it? That's all you
So good.
wanted?
Huh?
That's all you wanted?
Bro, that's the least I want.
You said the open price. It moved nothing. Nobody's down here.
I mean, we could take it to the lower side. There's this gap here,
Yeah, I got this fair value
imbalance that
gap.
haven't been filled. We need to bring balance to the market. So I'm thinking about TP. Last TP is gonna be right here.
Oh yeah, well, these are green.
TP2 is gonna be on a 1 in 11 risk reward. Let's see. Let's see. Oh, I'm so cold. But is this guy Astro here?
I don't know.
This guy, bro.
What you mean?
Yeah, bro. Don't trade off MC, bro. Just don't trade it. Unless you got extra money. Come on.
There we go.
Come
Oh,
on.
my mid's on. Two.
Drop, drop.
Is that break and retest?
Stack your money till it gets sky high. Yo, where's this guy Mushy at? Yo, Mushy.
You're watching a video.
Works out well. So
Yeah.
Remember
honestly,
you were saying
yeah.
that institutions and
I don't
stuff,
know.
they don't trade on a low time frame?
So yeah, that's just pretty much it for me.
I see the institutions. I literally
Yeah, bro.
marked it up.
They do trade even on a 2 minute time frame. Because they have to do scalp trades too.
Yeah, no, I just marked. There's institution right at on SPX 563.7.
Let me check
That
it.
impulse, that sell, and then that impulse back up.
37. Let
Marked
me
it
see.
out. It just touched that. It just touched that zone, so it can bounce from here. If it breaks it, we're gonna fall even more. Pretty
That
simple.
is a good one. That is a good one.
You better get at those puts. We touched
Nope.
that zone.
Nope. I'm not getting off nothing.
Okay.
Let's look.
If you
Yes,
can't
sir. We
see,
can make
there's
money
something
both
called demand
sides.
and but that's a demand area. So and there's also supply over there. So it could go either way.
Mhm. Yo, where's some water? I'll get back.
What is he checking? Uh, stack your money till it gets sky high.
And we
Told
should
you.
go up
We
a
touched
10%
that
upside.
institution
So
order, man.
that's just pretty much it. You can obviously
I'm
I said I told you, you better get out those puts.
nope.
You must be paper trading it, because there's no way you're still in.
Told you, but you know me, bro. After 8 o'clock, finish the same. After 8 o'clock,
Did you take a W trade today?
of course. But
How
I
much?
took, but I literally maybe let me check it real quick. Uh, history. It was nah. It was only $60. Yeah, not good.
Yo, this guy. Um,
like the last. I think the last W I took. It was like for. It was for a lot, bro. It was for hold on. What was it at? Like for like 300 or some shit like that, or 400. No, not that much, but yeah. But yeah, I was down already off orb. That's it made up for it. What the hell? I'm in a trade? No, bro. No, I'm not. Oh my god. But I thought I was in a. Oh my god, I am in a position. Oh my god.
Told you
Yo,
it hit institution order flow right there.
yo, how,
We can rally up to like
bro?
50%
How?
to the next
No,
institution.
I'm not. How? I'm not right. I'm not on a trade.
Bro, just look at your P&L. If it's moving, then you're in a trade.
It's not moving, but on my position. Hold on.
Then if it's not moving, you're not in a trade.
Hold on. Closed. It's moving, bro. It's not moving, but it's moving at the same time, bro. My P&L is not moving, but this shit is moving. I don't know. Oh my god, I don't know what this is, bro. Hopefully this shit don't mess me up, bro. I need to move out this shit. Oh, okay, okay. Makes sense.
Wow, it's crazy. I seen that institution. It bounced. I'm gonna add this to my strategy. I
Yeah, I
literally
I,
just
I used to trade that before, but I don't trade it no more.
Wait,
Either had time
no, it was an impulse balance and then impulse up. That was
type
cl-
shit.
that was clear institution right there. That's as simple as can get.
Did you learn about the 20-point system too?
No,
But that
I
shit
know.
is it does not.
I was like,
It's not like it sound, bro. It's not that tough.
calls could have went up. Damn. I should have took this, but it's about to go to 50%, and then we
That
can
shit's not
probably
as tough as it sounds.
what their strategy.
The 20% rate system. It's
What is
not
that?
as hard as it sounds.
I don't even know what that is.
uh,
Damn, what a reversal.
let's see this.
138 right before news. I like puts here. Let it rally up whatever it needs to do.
But yeah, but I need to ask him about the leverage shit. Talking about that fair I got. This guy. But I know this guy is short, bro.
Oh,
It's your back.
Oh yeah, I'm about to load up puts here.
You know what's great? I see another balance.
Interesting. I think I found something new. Well, it's not new, new to me. I'm gonna mark this out. My hop in puts right here. If we reject this. Yeah, yeah, yeah.
You need to come up to my balance.
I marked out that secondary and so that order flow right there. Um, can't really tell.
Type shit. Type shit.
150, 145. Who you talking to?
Hmm? Hey, I mean, you register for that shit, man.
No, I'm too
For the
busy.
workshop, free shit.
I'm too busy right now.
Type shit. Type
I
shit.
you just, I don't know. You're just gonna tell me information that I'd probably already either would forget or no. I just want to know why he wants to teach people so much. That's where I'm like, I'm a little bit
'Cause you want
suspect.
to make extra cash.
He said he was bored at home, so I was like, okay.
You
I
want to
mean,
make extra cash too, bro.
I've seen the other traders too. I've seen the other institutional traders. They're nice. Like Mr. I forgot it, Mr. Purple, something like that.
Mr. Green.
No, the other guy. That was another guy. He got
Mr.
on
Blue.
YouTube. He talks fast as hell too.
And he cuss a lot, right?
Might be, I don't know.
Yeah,
I
that's
watched his
Mr.
videos
Blue.
and I was like, wow, I like the way this guy trades.
Yeah, this guy is nice. He teaches good too.
Balls are going crazy.
He explained it so good.
Are you guys in calls?
Nope.
No.
What?
What you mean what?
Anything.
Not a Tuesday.
See, now it got tapped.
I'm
The
just, the institutions
uh,
got
yeah, the auto flow now here it
I
got
got a
tapped,
hedge.
and we
I got
might
a
dump.
hedge
We
plan.
might dump.
I'm even on both.
Let me show
Not
you.
even on both, but break even total.
Let me show you this.
Up 700, down 700.
Up 700.
Up 700 calls, down 700 puts.
Up shit.
Here. If this dumps, then I'm negative. Until the calls dump fully. Or the puts.
Type shit. Let's dump. Let's dump. Let's dump. Yeah, bro. If you dump, I don't see no more label. See, that's
Touch that
that level.
instant. Oh my wait, this strategy might work. I actually took that trade too to the downside.
Yeah, you see that that level never got hit. So it's a 2 out of 2 purity. It never got penetrated.
Wow. Wait, did I this with PBS box? Oh my god, what a great entry.
Forget about that box, bro.
No, the box is great. I don't think you understand the box. The box marks out all your order blocks and it also shows you institutions sometimes.
You don't really have to draw it for the box.
You do
You
because the
really don't have to
50% that
draw it.
50% is important.
Let me find another auto for here. I don't see
But just wait
anyone
for
here.
that. Wait for that previous order flow to be touched again and then hop in a
Nope.
call.
Nope, that's not good. You know why?
Why?
Because a purity level, it already got penetrated through. That gives it a 0.5, and then he already got tapped before. On a low time frame, that's bad. So it's most likely gonna pierce through it.
Okay. Okay.
Let's see. I might be wrong. Let's see. Could be
Hey,
wrong. Definitely.
Yo, my neck hurts, bro.
Me too, bro.
Like I'm like tweaking out trying to sit in the chair, bro. My neck is like stiff, bro. I can't look around. I can't look up, down.
oh, that means you slept wrong on it. Pause.
But I
No, for
got a
real though.
wooden chair,
No,
bro.
that's what I woke up in the middle of the night every time, bro, and my neck was just,
Let me show you on my chair, bro.
Oh yeah, you're gonna be feeling like that for like the rest of the day, or you.
bro. My neck is
I hate when that
weak.
happens. I'll be feeling sick.
Like I woke up like 3 times in the middle of the night, and I just
Come
felt
on.
my neck
Let's see,
sore.
Mushy.
Like I kept trying to fix it, but I don't know. I was sleeping on my back too. Like I don't even know how that happens, bro. I think I slept with it like my like chin too close to my neck or something. I don't
Bingo.
know. Bro, GMO said you slept amazing. Alright, bro. Alright.
I just did $200.
Type shit. Type shit. Look. It's gonna pierce through it. Watch.
Oh my god, never mind. I don't know if it respects it. I like
Okay,
calls, yeah.
now my puts are green and my calls are
Let's see.
red.
Let's see. It only counts where the candle closes. There might be some orders left, but I don't really. It looks. It doesn't look that great.
This could have been what we call rejecting 50% of the box and the order flow.
Oh my
See?
gosh.
I'm telling you, this strategy, I'm
There's no
telling you,
such thing as that, bro.
it's gonna work, dude. Watch. Look,
Look at
you
my
know how
chair.
he mixes. You know how he mixes little
I
supply
was
and.
speaking. Oh, you ready?
I'm gonna send a picture and on everything. Oh,
I
wait,
think
just
it
watch
took
my
15
screen. Actually,
minutes.
Look at my chair, bro.
let me show you my screen. Well, that is a depressing chair. Yeah, I'm depressed by looking at it.
That looked like it hurt.
Yeah. Look at my
Yo,
strength.
what happened?
I marked that institution right there, right? Then we touched that 50%.
Yo, my Wi-Fi ran out.
Don't mock.
Why Gmail
600.
send a chair emoji? That's literally what your chair looked like.
Oh, that contract did $400. That's a trade. Now
Mine's,
that's a trade.
mine's only up 285, but that's because I didn't get in at the top of y'all. Uh-oh.
Oh my gosh.
It's at 400 now. What the heck?
It's
Go back.
390, 390, 390, 480, 480.
Did you cut your
Yo,
calls?
did you hop on call?
No, I'm break even now.
Yeah, but don't.
Calls are break
Close,
even?
close
I'm
up.
500. Oh, I'm 555 on calls. I'm negative
Let the put,
555 on calls, and then I'm positive 480 on puts.
let the puts play, bro. I'm telling you, bro.
I'm
There is
letting
no
you.
more. I don't see any more
Trust.
institution auto
I'm
for
playing it. I'm playing it. Just wait. Just wait. I can cut it later. I can cut it even later if I wanted to, because this can drop a
type
lot
shit.
more. This can drop a lot more if we can inverse this full fair value gap here. Take out today's lows if Powell keeps. If Powell just says some garbage.
Bruh. Bruh, I'm so hyped.
Why are you so hyped?
I don't know, bro. I feel like I'm improving a lot, bro.
That's good, bro.
I swear.
Last time I felt like that, I thought I was on top of the world. Then I lost money. Then I
Well, we
never.
don't got the same mindset when it comes to losing.
Uh, okay.
Oh,
Wow.
okay. Wow. Okay.
No, we actually don't. Like I swear to God,
Okay, but dang.
When you take those L's, you gonna be in the dump.
I already took way more L's, bro. I ain't got nothing to lose.
What's the most you lost in option trade?
Maybe like 2 bands almost.
I've lost more than that.
No, you didn't.
I've lost more than 2 bands.
Show me. Send a screenshot right now.
Back in during everybody know I full ported back in December.
Bruh, stop saying that. If you're speaking about that, I lost like 5 bands, bro. Only that.
You just said the most you lost is 2 bands.
I don't know how y'all were
No, I
losing in
forgot about
December,
that.
bro.
But back then I
December and
wasn't trading.
November were my
I wasn't
best
trading
months.
options.
No, they
I was
were my
trading.
best months too. They were, I was having, and I just started trading, so I was actually was my best month because I was copying your trades. So you was having a good month. I was having a good month. And in the news day, I read an article saying that like whatever the news it said it was gonna be good. So I like bought so much Tesla calls,
Used to make bare bread.
and then for some reason I held those calls too. Like I don't know why.
Bro, I don't know how y'all ended those months red. I ended that month so green.
It was
We're,
FOMC. I'm telling you.
we're all so new, bro. We didn't even know nothing.
I was trying to
I
tell y'all to manage. We were doing so good at the beginning of those months. I was like, manage, just
Trust me,
manage.
bro. Nobody had management.
Nobody. They just thought everything I did was gonna go 400%.
Yeah, I ain't gonna lie. I did think that because
That bull run, bro, it's crazy.
I was on a streak, bro. That was actually, bro. I think that was my prime, bro. We gonna get back on that though.
Bro, I used to make 3,000, bro, on a day sometimes. That was crazy.
I can get back to doing that. I just wanted to do something like more with like more controlled. I feel like back then, like with running a server, I can't just be doing something like that. I have to be more controlled because things like that happen.
Wish you got that.
what?
What's up?
About what?
Oh no.
I gotta take a doo doo.
This dude said you gotta take a doo-doo.
But have you thought about creating a future site too? For features?
I have one. Once I make like 100K from options, I'll do futures.
I
It's
don't
not
care.
even worth it to do
Options, that's gonna
futures.
take a long time, bro. I like futures because you don't gotta deal with all this bullshit, gamma, all this stuff, all the Greeks. But they're very strict on the 50% rules and many other rules.
No, it's the top firms. You can live account just like you option trade.
Yeah, I know,
No,
but they have rules on on payouts. How can you
no.
get it?
On a live account, you don't have to request a payout because it's your money. So as soon as the profit goes to your account, it's just like
But it's
a
so
regular.
garbage. It's so garbage. It's like shares trading at that point because
Yeah,
it's still
you're not
so
gonna have
expensive.
that money.
Even the
Yeah,
minis, like even the minis, I think are still like $300, bro. Am I
yeah, but
tripping?
Michael is way more expensive.
I thought no, because this one guy trades like he put like a band in and he turned that into like 2 bands trading. I don't know what he was. I think it was the macros because the macros cost like they're more. I forgot what it was like more volatile or something like that.
Hmm.
It's like the SPX version.
For every tick, it was is like $3, something like that.
You say you gotta take a doo doo, bro.
I do, but I just wanna. I got.
How
He's
does it feel like
stalling right
trading
now.
today?
He's stalling.
It's 6 minutes, bro. If we take this to the downside, we have so much gap to fill. Loki should have held this
Y'all gonna
breath.
be watching the stream? The
Uh-huh.
FOMC shit.
No.
Let me know what happened if you watch it.
As soon as he says the word, we're gonna already know what the hell's gonna.
Yeah,
Might as well watch
you
the
didn't even
market.
need to watch it, bro. You're gonna see it.
He's not gonna say shit, bro.
No, it's not that. I don't even care about the Fed rates unless he does some plot twist and
You
then they
expecting him to
vote.
say hello, price dumps?
Yeah, that's what I'm saying. He's gonna say good morning. Boom.
Oh, hold on, hold on, hold on. She talking about spot?
Good afternoon. And that's it.
Yeah. Hold on. Talking about spot. One day. Oh. Oh, I almost hit it. That's crazy. I gotta take a picture of this. $35 more minutes.
Hmm.
Really? Oh. Now the race are gonna happen at 11:30. Well, I think it starts speaking at 11 or something. I don't know. Maybe the opposite.
It's so funny how volume just dies out. I wonder, like, where these what these candles are. These are just orders from who? Like, who's
That's crazy. He took that to downside?
who me?
No, 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 no. Watching this shit.
I took that rejection at the top of here to the
This
downside.
this
That
guy
was
he took spy, bro. Just crazy. Thank you.
I took that institutional trade right there. Look, it went to go tap it. In reality, it just really rejected the box.
Yeah, but trading today is not it.
What? Dude,
Not really.
if I held the other call, I would be up a band right now. Not my
If I
trading
held
today.
my foot, I would be up like maybe like 2,000.
I just I don't like holding. You can't convince me to hold in a day like this.
But don't you think about it? Like, how much do you spend on a trade?
How much I
Mostly,
spent on the trade?
yeah, on like any call or put on a regular trade.
Not really. If it's at the money, I'm not gonna wait for a premium price to get the value, and I'm gonna take it. I don't care how much you're charging me. I'll take the trade.
So you pay 1,700.
No, I would go a little bit out the money, and
Yeah.
I'll go
Oh, okay. So you pay like
600
600, 700, something.
to like 900.
Okay.
Yeah, because the Greeks are the same around that level. Like around the way Tasty Tree has it, it has
But
every
tasty
section marked
sucks.
out.
Tasty's good and it sucks at the same time. It's so easy, but I don't know, man. But
But
I
look,
just love it still.
you got one SD, like they have it marked out. So I always trade under the one SD.
Let me see. On 7 days, am I up? Nope, I'm down.
Bro, when FOMC happens, it's literally the price action is so pattern. Like I was like gapping up today was just it was a lot of, but I really deep down knew it was gonna gap up for real.
What's up,
Dang,
Xavier?
that's great.
Can't hear this dude, but
Get him is in and out, man.
Oh,
Bro,
hey.
I wish we had
bro,
in and
I
out
forgot
here.
to go to In-N-Out yesterday, bro. I already ate
Hey, bro.
yesterday. But do I
Um,
want Shake Shack?
if you want to
Shake
spend
Shack.
$30,
Chris said he got me.
He got money like that, bro.
Nah, Chris will
Fuck.
get you that 60% discount.
That's enough, bro. Whatever you got
Yeah,
looks so good, bro.
y'all be using that Telegram method?
Bro.
Wait, Xavier, does he work today?
Yeah, he's working closing.
God dang. It's good the
So
close
5
though.
to 12 or 1.
God dang.
I work closing too if you want to pull up the in and out after.
Okay, what'd you say?
I work closing too if you want to pull up the in and out after.
Hit both across town?
Hey, mine is closer.
No, yours is not. To my house?
Yeah, nah, Shake Shack's closer.
Yeah. Oh my gosh, I'm in closing puts and I'm just sitting here.
What the?
Oh,
Oh, there we go. What did I just say?
hey, news comes out right now, right?
Yep.
It just came out right now.
What am I placing? What am I placing?
Yes, yes, yes!
What
Goals!
is it?
That's why I kept goals!
You know what you could do now? Let it play a little, and then you can play the other side.
Yeah, we play both
Type
sides.
shit.
Then we close
How do
our
you
calls.
even? How do you even? Wait. Oh God, why are calls so green? I'm confused.
Oh my gosh! Give me my
Jamie just
money!
started talking.
Give me my money. Oh my god. Keep
Close,
going.
close.
Hit the order block.
Okay,
No, I'm not closing. Oh my god. Oh my god.
It's giving me a discount right now for
40%.
these puts.
40%. I'm out. I'm out. I'm out. I'm out. Give me out.
Fuck!
Okay, okay. We have our puts. We have our puts.
Bro, puts are cheap now. They did. I'm hopping in.
Yeah, wait. Don't hop in yet.
I'm gonna wait a
Oh
little bit.
my gosh. Oh my gosh.
You can hop in at the consolidation. Oh, yeah, you
Frick.
can hop at that
This is-
consolidation. It's not looking bad.
169, that's a
I am-
$400 move.
I am so smart for holding.
Yeah,
Who
the
told me to close my
consolidation.
calls? Who
Nah.
told me to close my calls in
What
here?
the hell?
Who
That
told
was
me?
crazy. I told you that, I think.
Yeah, striker. You always betting against me, huh? You
No,
always
bro.
doubting me, striker. It's always
You know,
you.
it's funny, Striker doesn't even trade at this time, so he just
Yeah, I'm just
He was
chilling, bro.
doubting me yesterday too, bro. What did your guys' calls open at this morning? I made like, I think like, bro, cause I held it till later in the day, cause I'm low key. I didn't even get out of bed till.
it made a band.
Yeah, bro. I was
Huh?
thinking. I did SPY and SPX, bro. I made like
You made a
2.3.
bambushy? You be going like that?
No, that was a paper trade.
Uh,
Bro, why didn't y'all
yeah,
let me
bro.
get
That
in
that call
though?
I made like 1,700.
We
I
were all
just
supposed to really take that lotto, and
I
we
did
won that lotto.
I took it at the heart.
But
I
it's
it
gonna go up.
literally
It's gonna go up.
it
Watch.
literally did what I
It's
said
gonna
it was
have.
gonna do, bro. It was gonna go and gap up to that order block, right? Whatever.
You see that you could have hopped in off this consolidation,
Oh,
but
5,600 puts. That's what
Okay,
I'm about to hop in on.
yeah, I'm in 5,600. I'm averaging down right now. I'm down 20%. We're gonna average down.
I still think we go up here.
Okay, boom. We're good.
Ever
good.
since I was a G, I spent a bit.
We good. We good.
Bro, they just blessed me with an entry. Thank you for driving price up. And now I'll take it to the downside.
How's puts are cheap, huh? Oh no, they not.
Dude,
I
that
think
five
it's gonna
six.
go up. Actually, I think it's gonna go more up. I'm
Yeah,
not gonna
it will
lie.
go up. It will. Don't worry. But the news already been priced in.
Yep. Yep.
But
Yep.
it's
It's gonna go
still
up.
still going up.
It's gotta
Off
go
how
up way
comfortable
more.
they feel.
It cannot just go down like that fast.
Yeah, you saw how fast it went up. I'm pretty
Yeah,
sure
but
it
no,
went up.
it's not gonna reverse like that. It's gotta go up like at
Hmm.
least a little bit more. It's gotta have a
This
whole
guy,
candle
bro.
like that, like a wick. It's got
These
a wick.
contracts are being cheap.
Oh my
I can
gosh.
go up on quantity. Thank you.
You can hop on a put for tomorrow. I might do that on my paper trade shit.
5,600. If it goes back down, that's $1,000 play. No, $600 play.
I'm gonna hop on a spy puts for tomorrow.
I'm not
Later.
in though.
I don't know.
Not in
Yeah, of
yet.
course.
Wait, it's going, it's going. That's why we play both sides. Both sides.
What's going on?
It's a fake. Kill price. It's a fake. I'm telling you, it's a fake.
Yeah, see,
I'm gonna
it
go.
had to wick. It had to at least wick like that. Now, price can drive down. It's
You know what
that
that would
doji.
show me?
That's doji. So that's reversal. Go, go, go.
That's literally the
Yo,
whole
Yo.
institution shit. Hold on.
it's that time.
Is that time? Yes. Uh-oh, it's
If
wicking
this one
again.
actually break and
Mhm.
take out the low, that's gonna be really good.
Wait.
Oh my god. Those calls, bro. Those calls saved me.
Gavin, are you still on those calls? The spy calls?
No, I closed them. I'm not even gonna lie.
Like in the morning?
Oh, those spy calls? No, I closed those earlier. Maybe around like 8:30 something, maybe.
What is that in Eastern? That's like 11, right?
I don't even know. Let me see.
Yeah, you're in the West Coast, right?
Yeah, my
Yeah,
chart's
so
my chart's on my time, so let me see.
yeah,
Yeah,
so that's 3 hours. Yeah, 11.
You got the space
Right.
candle here. Oh my god, bro.
it's 11
So good.
here.
What is it at?
Wait, you kind of sold low a little bit, right? 11, was it high?
I
I think
mean,
12 was like
What am I
the
doing?
bottom.
yeah, I wasn't at the highest, but I mean, I got out around that time. I know I got up out of my bed at like 8:30, and then I checked it, and I was like, damn, those lottos were green.
Might have to start swinging like that. Shit.
I don't know, because it can gap down to you could be at 0. Yes,
So beautiful.
sir.
Yeah, but let's see if how we do with this supply. My bounce off.
Yeah, you guys got predictions? Predictions. Real quick.
Well, I just caught calls on the way up, and I
Oh
sold
my god.
those.
Oh my god. Watch.
Oh, wait,
Yeah.
what?
Hold on.
Well, right
I
now,
didn't hear it.
right
Dumb.
now we're playing because it's
This is
FOMC.
insane, man.
So the market
Bro, I
gapped
gotta
up. I
mute
got
this,
calls.
bro.
They held rates. Of course, but they were actually. You didn't know that,
You
GM?
got
They're
calls?
going. They can't
Yeah.
talk about rate till the 2nd of April. That's what they announced it.
Wait, on calls on what? What are you looking
SPX.
at? XPX?
Yeah, SPX
See that?
calls on that gap up. We caught 40%, and then now we're in puts, but we're negative because we got in earlier. We're down 12% right now. But I'm just gonna see if we can play the downside if Powell says something bad.
Are you looking to the downside on
Yeah.
his speech? All right. We're on the same page. All right, that's good.
Let's see. EMAs can cross here though, but it all just depends on what he says.
They said he's bullish, but like even though it might pump the market for like a good hot second and then dump. This guy's about to rug everyone.
Yeah, there's always a fake move, and I'm pretty sure that was it right there. That crazy candle that we just had.
Mm-hmm.
And then you can probably anticipate the next, I don't know, maybe around it's 110 my time, so maybe 210 or no, 220 to 230-ish is probably when the real move will develop.
Yeah, so look, he speaks in 22 minutes, 21 minutes.
What chart?
This is what we're waiting for, basically.
He speaks in what? He's not talking right now?
No.
Mm.
Yeah. Let me just set puts just in case. Yeah, is it crazy to put puts on like 3 ETFs at the same time?
Yeah, that's
3
nutty.
You
You
gotta
might as
play
well play
both
it one.
sides. You never know on this.
Bro.
Let me see.
You know, this guy Powell's like the reason when I did those swings during December, I lost bread. You know, got to get my get back.
Or you gotta learn a lesson. You feel me? You never know. But this is basically what we're waiting for here.
Oh, you better stream it.
Yeah, I can stream it when.
This market is looking. Why is it green? Need this to dump.
Pretty much just trading.
Yo, damn.
Oh my god, bro! I missed that entry, bro. I wasn't checking my high time frame. That's crazy. Hold on.
Oh my god. If we break above 654, there's a gap that we're gonna yeah, I'm definitely taking that to the upside.
Oh, I love this, bro.
Well, I'm out of my calls, so I'm not really gonna take anything else.
Oh my god, yeah, make these contracts cheap so I can double down on. Matter of fact, I'm gonna buy 2 of these.
Oh no. Oh, no.
You like that song?
What happened? What you gonna do?
At 5,600 put. I'm
For
waiting for
tomorrow
it.
or swing or no? Swing?
No.
Oh,
I'm actually swinging a put with real money.
1,000%.
I do believe we gap down tomorrow though.
Oh yeah, oh yeah. I feel like we hit this order block. It's done.
Try to trade strategy on news is crazy.
It's not in play yet.
If 2 hour closes here, there's a nice gap. A very nice gap, but that doesn't close until the next hour. So you can get in calls here, and that entry would have been at that break even. Damn.
I wish I held my calls. It's okay.
Because we got so much open space that we're
I
gonna
didn't
fill.
even trim. That's the thing. I didn't even trim. I let go of them. I literally sold them all.
How many contracts did you have?
3.
You did 40%. Oh,
That's a good spot. I think it's gotta hit that order block, bro. It's got it. Yo, can my package get here, bro? I've been waiting for like way too long. That's how long.
type shit.
Like, bro, it says it was in Kansas 3 days ago. It says it left Kansas 3 days ago. It was supposed to be here yesterday. Oh, yeah. Okay.
I got 5 contracts of 550.
550.
Mm-hmm. Like I'm getting ready to get in if it looks like we're gonna dump.
Mm.
Five, 600 is good too. But that'll only will equal up to a $600 contract. Actually,
Oh. No, this is good. Let's go.
Let's see, boys. Let's see.
EMA, 9 EMA, and 20 EMA are about to cross. And VWAP.
Face on this.
VWAP, all three of these are about to cross. If all three of these cross, upside is definitely attacking today's high.
Yeah, all right. The 5 minute just crossed.
2 minute they crossed a long time ago. You got entry right above that inversion of the fair value gap, right above that breakout.
How long till he talks?
14 minutes and 20 seconds. I think I averaged down puts here.
2:30. We definitely see some downside. I like us. I like a. I might enter this trade now.
I might start upping my risk too. I have a
That's what
lot
I'll
more in
do.
my account
I'm
than I
gonna.
used to.
Yeah. I'm gonna lower my. I'm gonna do 2 contracts of that, and then
Like I used
I'll
to,
add the other 3.
I used to maximize my trades, maybe like 1,000, 2,000. I think I could play with a lot more than that.
Especially with SPX.
Yeah, I think I could play with a lot more.
I don't like this one.
I like how they're driving the price up.
That's what I'm saying. Like,
I love this.
what is this? Insider news or something?
Does this mean it's just gonna dump all the way down?
I hope so, because the percentage I'm about to get on this contract is.
God. I actually
Sorry.
might load calls here just in case. I'm gonna load calls right here. I'm not even gonna announce it. I'm just gonna I'm gonna put. What are we thinking? 5,680.
For calls, you can target that open space, so 565,674.
Yeah, I'll put 5,680 calls.
How much is 5,680 anyway?
It was 6 something.
Oh, yeah, $600. Godly.
I bought 4.
4.
I'm in puts for about the same amount.
Jesus Christ. We do got some rejection here.
That is that order block. That is that order block. I already averaged down up here too. I'm doing all right. I'm cold. I got no shirt on.
0 to hero. Should I do 0 to hero on this?
That's
Literally just hop in a call, then go take a dump and just come back. Not a call, I mean, I like puts here. I think that the next 2 minutes we're gonna see something.
when this candle when this 2-minute candle closes, it'll be 10 minutes till he speaks. Oh, my neck, bro. I think, like, I don't even know what to do, bro. My neck, it's like,
Pause.
chill.
Which side is it?
It's the back. Like, not even like my neck. It's low-key like on my back. Like, right before it hits my
You
neck.
gotta stretch, and then when you sleep, you just gotta sleep on your back.
That's what I'm saying. I think I had the pillow too far, like, down my back.
Facts.
So on my neck, it was like, I don't know. Alright. Get a nice little pullback here. Oh, I'm ready, I'm ready, I'm ready. I don't even know.
See you next 2 minutes. See you dump here.
I'll be right back.
Fed rate still hold, which is not a surprise.
Are you going somewhere? Are you going somewhere? Who's house? Oh, bro, got new friends? Bro, got new friends? No, I know. I was gonna go golf. I was gonna go golf. Oh, where's the other option? But you already told you're going to. That's the week what you want. Bro said it's down the street. Where's? Yeah, I don't know. Well, I won't even be home. I won't even be home. I won't even be home.
We're gonna dump even more. Told you the next 2 minutes we're gonna get it. There's no way they're gonna. Yeah, like I'm confident this is just gonna dump. Yeah, there it goes.
Bro. Boom, 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 boom. Boom, 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 boom.
Boom, 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 boom. Yeah, I like this. No risk. Let's add a contract. They're pretty cheap. Only $90. I don't even care. I'll go and beat with these.
What are you getting?
The 550s. 550.
They're $90?
Yeah, they're cheap. Or they're 100 now.
Yeah, it's cheap.
You could probably, if you take that, you could take like 50 of the. Four is pretty good. It did 100 like seconds.
Yo, yeah, my neck. Can't even sit here, bro. Five minutes, boys. 5 minutes.
Damn you, pal. Damn you. I could have been rich.
What else is happening today? FOMC. God
Y'all
dang
looking
it.
at SBX.
FOMC Powell speaks. God dang it.
You said what happened? There's a press conference and a statement. All this on 2. Oh wait, that's 2 p.m. That already happened. The press conference is what's really gonna. That's what's really about to drive price.
Well, we already am. We're playing. We're trying to look at puts for FOMC, but or for when Powell speaks, and then I'm hedging with calls. Bro, Xavier, bro.
What's up?
I'm so hungry.
Bro, it sounds like you always hungry at this point.
It's like you always hungry. I don't want to hear it, Mr. Freaking 3x3 extra grilled onions, animal style fries. Like,
Whoa, last night for my employee meal, all I had was a Flying Dutchman.
good for you,
Yeah.
bro. I don't know what you want me to say.
Employee meals. I
still-
used to have those at Chipotle.
Dude,
They have employee meals at Chipotle? They don't.
Yeah, they do. When I used to, yeah, that was my first job out of high school. I used to,
Chipotle.
I used to
Cafe
stack up
Rio's
burgers.
better than Chipotle though.
No, back when I was back in 2021, Chipotle was rocking. Ooh,
Chipotle sounds fire.
Contracts are green.
I might
Sell
get some
offer
Cafe
goes.
Rio. I ain't gonna lie.
Well, Cafe Rio over Chipotle? Crazy.
What?
Bro, Chipotle's barbecue brisket. Oh my gosh.
Y'all have not had flavor then, bro. Cafe Rio's flavor. Chipotle's so dry.
Bro, like Cafe
Now
Rio's
when I cook
good, but
it,
it's just like not comparable.
now when I cook
What
it,
do you mean it's not comparable? Because Cafe Rio's way better. That's why.
They're just two different types
Chipotle is
of
like
like.
McDonald's of freaking burritos, bro.
Whoa.
Yes, dude.
Damn.
Oh, he disagreed with me, bro. He disagreed.
That's a bold statement.
Okay, so what's like Rubio's is better.
Who the fuck eats Rubio's, bro? I should never heard that.
Oh my gosh, I'm just saying what do you, what what would you have Chipotle over?
Chipotle. I mean, do I got to go in the same category or like can I just name anything?
Well, obviously same category if you're talking about.
All right, I'd have it over Roberto's. Shit. No, there's not many places like Chipotle, you know?
It's because it's Cafe Rio and there's another one. I forgot what that one's called. I think it's Cafe Rio and Rubio's, bro. Those are like
Zupas?
no, not Zupas. I think it's something like that though. I know what you're talking about.
Hmm.
Good afternoon.
Oh, Qdoba.
Yeah, Qdoba. Those are both better
Qdoba's
than
ass.
Chipotle. What?
Dude, it's just
Chipotle's
like
chips are nasty. They're way too salt. Like, dude,
I don't go to Chipotle for the chips, bro.
okay, in the burrito, the rice is thick and dry. It's clumpy. You don't got, the
I feel like you're
steak.
going to the wrong Chipotle.
The steak. I don't ever see no juice coming off the steak, bro.
Bro, it's because I'm not cooking it.
Yeah.
Bro, when I was cooking it, I'm
no,
telling
but
you, the
I'm
food
saying
is
now,
soft.
bro. The way it is now, bro.
Maybe now. I haven't
It's
been to
greedy
Chipotle
now,
lately.
bro. The way food is.
No, they are
today,
greedy
bro.
as fuck, bro.
I ain't worth it, bro.
See, I got people. Actually, no, I'm not gonna glaze in and out.
Yeah, you love that place, bro. You got it. Enough.
I mean, I could talk shit about Canes all day. I hated that job.
Just because you quit and you hated the job does not mean you have to hate on the place. Kane was still good.
I personally like it's good, but it's just like sometimes it's like mid.
have to go to that YouTube link. Let's see. Which one plays first?
You know what I'm saying? Babu.
Oh, this guy's about to speak.
Babu. Is he like if he releases like good afternoon, is he?
Yeah, that good afternoon is gonna be a $3 move.
The volume's dying out. Let's see. Let's see if it just goes red.
Bro, seeing the stock market like barely move is funny.
13 seconds.
Just catch the first impulse move. It's gonna drop a couple more dollars after once you get it out.
Oh, it's moving like crazy right now.
Uh-oh.
Mm-mm.
Good afternoon. My
Look at
colleagues
the
and I
market.
remain squarely focused on achieving our dual mandate goals of maximum employment and stable.
Squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Conditions are solid,
All right,
and
good.
inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year.
Don't do it right. Don't sound bad.
Recent indications, however,
Holding puts.
Sorry.
Surveys of households and businesses point to heightened uncertainty.
Wait, are you guys
about
in
the
anything?
economic
Are you guys on
outlook.
calls?
I'm on calls and
It
puts.
remains to be
Oh.
seen how these developments might affect.
Bro, I
future
saw your
spending and
swing. Are you
investment.
actually doing that?
What's
In
it?
our summary of economic
Your
projections,
SPX swing.
the median participant
Well, I
projects
don't mean
GDP to
I
rise
meant to
1.7%
type day
this year,
trade. I don't look.
somewhat
Oh.
lower than projected in December.
I don't ever look
Bro,
at that.
I saw-
To rise a bit
I saw
below 2%
SPX
over the
swing
next 2
trade. I'm like,
years.
what the
Just look at the
fuck?
expiration date.
The
It
labor
expires.
market
Yeah,
remains
I
solid.
was just
My
like,
calls are
yo,
green
is
right
he-
now.
Annual job gains averaged
good,
200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year.
Bro, that
The
shit might
jobs
just
to workers
reach
gap
all the way
has
to the
held
high,
steady
bro.
for several
Your
months.
calls are eating.
Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators.
Yo, Striker, how much you up
suggest that
today?
Conditions in the labor market are broadly
What
imbalanced.
you up?
The labor
Why you
market is
asking?
not a source of significant
I'm just asking,
inflationary
because-
pressures.
I haven't made anything, bro.
The median projection
What?
for the unemployment rate in the SEP
Are you for real?
4% at the end of this year.
Yeah,
and
I made a little
4.2%
some of that
over the
trade.
next 2
Not
years.
that much though.
Those calls
You
are so
lost or
good.
you,
Inflation has
bro?
eased
What?
significantly
I won
over
that
the
trade, I
past
won that
2
trade.
years, but remains somewhat
Oh,
elevated
Calls are up
relative
at
to our
1100 right
2%
now.
longer run
Because
goal.
I saw
won
you
that
was
trade,
on.
Estimates
and then
You
of
was
I
on
played the
puts?
consumer
upside.
price index
Yeah, and then you
other
played the
indicators
upside?
indicate that
Yeah, I
total
thought you made
CPI
hell.
prices rose 2.5%.
These
over
puts
the
are killing
12
me.
months ending in February,
My
and that
calls are
excluding the
cooking.
volatile food and energy categories, core
Close the
PCE
puts, bro.
prices rose
Close the
2.8%. Some near-term measures of inflation expectations have recently moved up. You see
God
this in
damn,
both
bro. Did
market
you get
and
in like at the
survey-based
low?
measures,
Who,
and
me?
survey respondents,
Yeah.
both consumers
bought
and
early.
businesses, are mentioning tariffs.
Like
Not
how low?
not down here. Like
Oh,
maybe
like on that Fair
right-
Valley
Still,
gap?
however, most
Kinda, yeah.
measures of longer-term
Oh,
expectations
okay,
remain
that makes
consistent
sense.
with our 2%
It's only
inflation
up
goal.
30%.
The median
Oh,
projection
okay.
in
I
the
thought you
S&P
got in,
for
like,
total
at
PCE
the
inflation
low.
is 2.7% this year
Yeah.
and 2.2% next year, a little
I
higher
was,
than
like,
projected
green.
in December.
I was green.
In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate
Oh
to
my
promote
God, this
maximum
week is gonna be-
employment and
next week is
stable
gonna be
prices
nice.
for the American people.
Yeah, I'm waiting for the calls.
At today's
Bro,
meeting,
Pit,
we
if I took the
decided to
NVIDIA
maintain
calls,
the
bro,
target range for the
shut up,
federal
man.
funds rate at 4.25
that
to
NVIDIA call,
4.5%.
bro, that
Not
shit would
next
have.
week, but
Looking ahead,
we get
the
on
new
the
administration
setup.
is in the process of implementing significant policy changes
Bro,
in 4
I
distinct
ain't trade shit, bro.
areas.
I'm actually down today.
Trade,
I
immigration,
just
fiscal
quit.
policy,
I
and
mean, I
regulation.
just stopped trading.
It is the net effect of these policy
I'm gonna
changes that
swing
will
a put
matter for the
tomorrow.
economy and for the path of
You're gonna
monetary
swing
policy.
puts? Paper or real?
Recent developments in
Real-
some of these
real
areas,
decent.
especially trade
sure, for
policy,
sure.
uncertainty around the changes
Gotta
and
be
their
spied
effects
on
on the
SPX.
economic outlook is high.
I think you should just
As we
do
parse the incoming information,
you want to call just do the
we're focused
NVIDIA
on
calls, bro.
separating the signal from the
I'm not
noise
doing
as
calls.
the outlook evolves.
Why are you doing puts?
As we say in our
Never, never,
statement,
never.
in considering the extent
The
and timing of
market is not
additional
gonna
adjustments
reverse.
to the target range for the
I mean,
federal
the
funds
market's
rate,
reversed.
the committee will assess
Everything looks the
incoming
same
data,
to me
the
right
evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard.
Howard Schneider with Reuters. Thanks for your time. So 2 things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, Too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the five-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Nick Timmerow, House of the Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms. Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. You know, I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low 2s in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at the they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3, and so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And, the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other? In
labor and inflation, just across the economy. Have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with, people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up, but prices also went up on dryers, which were not tariffed. So the manufacturers just, they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Craig.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the
Because
pandemic.
you could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect, by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we hear that people are very reluctant to take on. To allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And, there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment, because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecasts that really show significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's a high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
There's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months a 1 in 4 chance of a recession. So the question is whether whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I no desire to change that answer and have nothing new for you on that today.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. You know, we look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but you know, nonetheless, we take notice of it.
Thank you.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Yeah, look, we're aware of we're well aware of how things are going to evolve and the timeframes and all that. And you know, we will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty. And we're watching that carefully, and we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. You know, these decisions are going to be made, and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about their implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year, and we'll be adapting as we go.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you anything. You're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was?
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. The idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero, and you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, which for some time was kind of our problem. Now it's slow, but it's definitely, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time. And that probably has to do with, turmoil at the beginning of an administration that's making, big changes in areas of policy. And that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify. You were talking about how tariffs were a good part of the uptick in the inflation forecast, and I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah, so in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not, but some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly, committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. And of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey readings and the market-based readings all show relatively, well-anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, what speed. There's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down. They tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer-term or medium-term inflation expectations are moving.
Neil. Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
Can I do a quick QT question? Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because, we want to stop runoff in net at some point. We haven't made any decisions about that. But, we want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I mentioned, I think we're well positioned to wait for further clarity, and not in any hurry.
Matt.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed the line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, it lives its useful life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, conveying the sense of the balance of risks was important, that they be in balance or close to being in balance. That was useful as we approached liftoff, if you remember, but we're past that. Beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but, we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from, higher levels to pretty close to 2%. While the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the 2s with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
It's not appropriate for me to speculate on political ideas or fiscal policy for that matter. So I'm gonna pass on that one. Thank you.
Daniel.
Hi, Chair Powell. Daniel Avis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those. And so that's kind of baked into the numbers. What happens, it will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Hi, Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. It slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
You know, it was actually the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And you know, it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why you know, pretty strong support. I'd just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. You know, we're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
So what do we think? Let me know.
Bro, this guy is dodging questions left and right.
The last
Crazy.
minute, I don't know why I was dodging, bro.
He said, ha, ha. Bro, if he answered it, there would have been straight one direction. Now this shit's about to be choppy as shit.
He ain't want to speak on nothing about Trump.
Oh, if he just said tariffs are just cooking us, boom.
I took the downside right now. I didn't take the upside. I literally stared. No, I did take the upside, but I took profit for some reason. But I'm in puts right now, and they're paying pretty good.
I'm only in those calls that I just called out, and I'm holding those all the way till next week.
Next week?
Yeah.
Mm-hmm. Yeah, that probably would hit. Next week is like
Expecting
this
the
end of-
market to recover a little bit.
Yeah, it is.
We got mainstream stuff, things that will get
Why do-
affected first.
Why was he dodging it? Oh my god.
Hey, that
He's
shit
just
went
been
on for like a minute.
Everybody taking profit now. Sell it to me, everybody. Sell it to me. Give me all your money. Thank you. Appreciate it. 300 just like that. Oh yeah, keep feeding me.
Give me more.
That's literally
Give
what I was
me
waiting for. I
more.
was waiting for this dump. I was waiting for people to stop talking. For him to.
Give me more.
And that's how you trade.
This shit go
I
down.
got out of
Yesterday's
the call. Oh, I'm gonna
goes
speak
yesterday
experts.
high.
No, you're not in anything. Don't lie.
Oh yeah, I'll share my screen.
You're still in them?
I just hopped on one. 2 days XP. I'm gonna hold it. Probably. I'll try to
Wait,
post tomorrow.
wait, Gavin, how much contracts did you get on XPX?
I got 3.
3?
$850 worth. Damn, that was volatile.
You said it.
What happened?
That's 600. That's 200.
Yeah. Pick a break yesterday's high.
Yeah, bro, I'm gonna hold this shit.
Everything I just bought for calls, I got like 2 to 4. I only got 4 Microsoft calls, and then everything else was like 2
Oh,
to 3.
sell me your profits. Thank you.
This is a guy talking
Give me
about
money now. Oh my God, please fall.
But just get a put. Trust me, for tomorrow. I
Bro,
analyzed the previous FOMC, the past two.
did you see the TRG trade, bro? This guy literally
Retracement
did the
happened
hammer
yesterday,
method.
bro. We
Shit
already had
went
a
down.
retracement.
Holy crap!
Let me get the emoji, bro.
I was being sad because I was like, damn, I didn't get to catch his move, but I'm literally catching the downside. I want to hold this back to that previous order flow.
I should have got some more cons.
Damn, and the fact that I was actually like, damn, I'm not, I didn't get no profit out that.
It'd be
Damn.
alright.
Breaks.
No, that's crazy, that's crazy.
Bro, if he said Doge was the
You
thing,
talked about Doge?
Doge would have pumped. Crazy.
Dude,
Dodged.
who's
That's what
down
he's
2
like,
bands? Phil, you're down 2 bands. Real money?
political.
Real money or fake money?
I'm
Yeah,
down
so what we
only. I'm only down 600 now.
Oh, you took that put?
No,
Mm.
I was short, but price
Oh,
just kept rallying up,
what
and
made
then
you hop on short?
now it finally made
What made you hop on short?
it's like retracing.
What made you hop on short?
Well,
You see, I didn't see.
we right when I was just bearish because we swept AM highs, so I was thinking we would get a bearish breaker to the downside, but I was wrong and price just kept rallying up higher.
For me, it broke this. Hold on.
Bro, can you wait? Is this gonna fall back to the?
For
But I'm
me,
not gonna lie, it was a
you
silly
see right here
trade because
on
we had
the.
this fair value gap and this order block that was holding us up. So I really shouldn't have went short off that. I should have waited for more confirmation, but it's whatever. I made I made 1.5 back just from the loss, so I'm still down 500.
Did the average down? It looks like it.
Yeah, a little bit.
Oh my god, is it gonna keep falling?
You see that level?
Yo,
That
what's
key
prediction
level
for tomorrow?
when it broke with the
What we
high
got?
volume.
What we thinking?
It was good.
I gotta look at the higher time frames. I think we're falling.
We're falling?
I'm on puts. Already told you.
We're definitely gonna gap down tomorrow.
Gap down. Like, well, how much you
The
think?
contract's worth 1,100 now. Oh my god.
What happened? I'm so tired, bro.
I don't want to hold this. Well, I can't hold it. I can't.
I don't even check my gamma, bro. I just hopped on a put.
That's bro. I was actually like I was bummed out that I didn't catch the calls, but I don't give a damn no more.
I'm so cold.
Oh my god, bro. I'm about to break even on this shit.
Oh, thank
I was
God.
gonna
Thank
hop
you,
on
Lord. Thank you, Lord.
SPX, but it's too volatile.
Thank you, Lord.
Up 120.
It just took everybody's profit. Oh my God.
This guy.
Let's go, bro.
Contract worth 1,500 now.
Trill, you swinging or 0 DT?
Nah, this is just a day trade. I'm done swinging.
Yeah, bro. I'm swinging a put. Let's see how it plays. I'm gonna put a stop loss on break even.
Yo.
What's up?
Bro, he knows the market is cooked, bro. He knows tariffs is doing it.
But bro,
He
Mr. Wolf probably
he
made
said
hella money.
mostly tariffs is cooking the market.
He
He
held the
didn't want to
call.
say.
Oh my gosh. I had a call and I only made $70 on it, but I sold as soon
What?
as.
Only 70?
Yeah, because I got out early.
Oh.
I saw like I got out at around at 5, 6, 6, 9 before it started doing its impulse. I don't know. I don't know why I got out. I got scared. I don't know. I panicked.
You always be doing that.
I don't, but I made a band though. On the downside,
Type.
Oh yeah, you did.
if I held, I would have made another band.
So you should be going crazy then with that challenge.
Well, I just made a comeback from the losses. And then,
I'm in the money. I'm in the money. Up
Let's
160.
fucking go, bro. I just
Easy
broke
money.
even. God damn.
contract's worth 2 bands now, and it was worth 5. I bought it at 590. It's worth 2 bands.
I can't even see shit.
$1,400 profit. Jeez.
Oh yeah, I had it. So cold. Hey, Wicked, you here? Wicked here?
I'm so tired, bro. All right, we made some money.
God, how long works? Oh, she already emailed me. Oh shit. Come book appointment with me here. I recommend you look at the program before the meeting. Tell her know your interest. Man. I'm just trying to get financial aid.
All right, I gotta get some things done.
Am I in the money? Let's see.
30 minutes.
No, I'm not in the money no more.
All right.
You about to hop off?
Yeah.
Man.
All right. I'll catch y'all.
All right.
All right. Y'all have a good day.
Yeah.
You too, bro.